All right, greetings, guys. Good morning, good afternoon, good evening, wherever you are joining us from. Welcome to King's Forex Academy, King's Forex Synthetics. We today are going to be looking at something very interesting, very eye-catching, and an eye-opener to Deriv. Before we proceed, I would love you to kindly give us a subscribe or click on the subscribe button. Please share this video to all of your loved ones that you know trade forex, and if you don't have a Deriv account, click on the link in the description, create a Deriv account. Also, do well to join our Telegram channel. Link is in the description. So let's get down to business, guys. So today we are going to be looking at why we took this sell and the modalities in taking in trading synthetic the right way, the best way to trade boom and crash. You know already, I'm your best boom and crash trader. I trade boom and crash the best way possible, and we catch massive amount of pips. Right here we are reading over 400 plus pips, 600 plus pips, and all of that. So let's get to business. Number one thing you always love to do when trading boom and crash, number one is always start your analysis from the daily time frame. Top down analysis, like I always advise, go from the daily time frame. So from the daily time frame, what did we notice here? We noticed few things here. Number one, the all-time high of the market, the daily all-time high of the market currently ranging from this level all the way here. This is where price has been around. So we are not looking at the entire all-time high of the market, but the most recent, let's say the swing high of the market. So we have the swing high here. All right, we mark that out. My philosophy about trading boom and crash is simple. Start on a larger time frame, mark out all of your key zones, and what I use for my key zones are my line chart and my candlestick chart. So you can see on my line chart I had to pin out my key zones where price retraced and key areas where price has respected. All right, I would have loved to mark this because you can see price kept respecting this very zone over and over again. And when you come down to um the candlestick chart, you see price respecting that zone so well. All right, and then after doing that, we boil down to the lower time frame to identify the market flow, the market trend, the market structure. All right, we have identified the trend currently to be downtrend. Currently market is in a downtrend. Okay, so now we want to identify structure of price. We have identified the trend. Now we want to identify the structure of price. You see, there are several things that needs to lead you to your trade execution. You cannot just execute a trade based on assumptions. I always tell my students one thing. I said always be reactive instead of predictive. Once it comes to trading, do not try to be predictive, but instead be reactive. When you react to the chart, you are always most likely to be correct. But when you predict the chart, you are most likely to be what? Wrong. And this is where we got all of this. Now, after getting all of this major input from the major time frame, and I happen to notice the major uptrend moving from here, and I saw that price had come to a major all-time swing high right here. So what did I do? I marked the swing high location right here. I marked the swing high over here. You can see that this is where I took that initiative from, marking the swing high right here. So now that we have our swing high, we know that price has hit into what? The swing high. And most likely what I was expecting was to see a reversal at this exact level. Now after price ran into the swing high, you will see we have a candle range right here. We have a candle range CRT right here. And when I saw this, I knew this occurring at a very key resistant level. Okay, at a very key resistant level such as this will mean price is about to reverse. So whenever you see your CRT applying at a key level, a key zone, know that there is about to be a reversal. So I was very certain of that. On a lower time frame, I could have taken trades all the way from here to the low of this very large 4 hour candle, and I would have made a lot of money trading on a lower time frame. But I never wanted the crumbs from the market. All right, I wanted the major ball. I wanted the major ball. So right here, I identified the CRT and I waited on the 4 hours. I saw price come down all the way here. Now, first thing I needed to understand was with my Fibonacci, always use your Fibonacci. If you don't know how to use Fibonacci and you don't know how to use the CRT, definitely will have I'll be dropping a class after this very video explaining the CRT and how to use the Fibonacci, but this class is not for that. Now at the Fibonacci, we can see the zone, the reversal zone, um the retracement zone right here. So right at that retracement zone, we're looking to see price, reverse back. And right here you can see, which is one of the key reasons to mark out your key zones on higher time frame. You can see price respected so directly to that reversal right here, and we could see price moving back in. Now after price had left this very zone, this very resistance zone, forming the CRT, price left a what? A fair value gap, an FVG right here. Price left on what? FVG. Price left an FVG for us right here. So looking at this FVG, this was my target to say, okay, this is where I'm going to enter the market back. And we saw price reverse back into the market. That was what informed my entry into this market. And whenever you are entering at the FVG of a CRT, where will be your take profit? Your take profit will be the previous low, the previous swing low. Okay, and where is the previous swing low? Right here, which is why I entered for this first entry. And you can see price is staying in motion. We have done over um we have done over um 582 pips on the first entry. Okay, we have done 582 pips on the first entry. So now notice one thing: boom and crash is a very high respecter of trends and chart patterns. Trend, candlestick patterns, boom and crash, highly respect those. This is why I always preach to everyone watching. If you're watching this video, you're trading the currency market and you have been finding it difficult to navigate through or to be profitable, it is high time you try the boom and crash or the synthetic market, where it is purely technical analysis. News doesn't affect your trading and news doesn't take you off the line. So right here, what I drew in my mind was identifying my trend. Okay, I didn't have to put all of these on my chart physically because I didn't want the chart to be messy. So but I identified my trend, and then when I had this entry, I wanted to see something that is giving me a confirmation after these three confirmations for my entry right here. Remember, this is a reversal I'm expecting here, and I didn't just enter when the candle hit here. I entered when there came a confirmation and a rejection from the fair value gap that yes, this definitely is going to be a good sell. So now after that confirmation, I wanted to see price breaking this low, which happens to make it a change of character. All right, what we'll call COCH, a change of character right here, right? We have COOCH. Okay, we had a change of character right here. Price broke this previous low, created a lower low, and created a lower high. Now this is where it all gets interesting. Once price broke through this lower low, I noticed and I confirmed immediately, like this sell is going to be strong. So what did I look for? I looked for the next zone around here where I could get a reversal and then a re-entry into this market, which is why I search. Let's go down to the lower time frame. Like I said, top down analysis is top notch. Nothing beats that. Okay, nothing beats top down analysis. So right there, let's stay at the 4 hours. Right there at the 4 hours, I used my Fibonacci retracement. Okay, I used my Fibonacci retracement right here from the high of this move to the very low of this move. I used my Fibonacci retracement. And what was I looking for? I was looking for the previous order block, the previous order block that affected this market. And where was that order block? That order block was right around here. All right, this is the order block right here. Okay, I didn't want to execute all of that on the chart, but here the other block lied right here. Okay, so now what I did was I went down to the lower time frame about 30 minutes, because we have looked at 1 hour. I came down to 30 minutes to see and make sure that I'm doing the right thing. Okay, so now the most recent order block, um the most recent order block um to above the zone, above this very retracement zone, is this one right here, which is why you saw I had to what? I had to keenly mark it out. Now notice this, that price came all the way back up here. Notice this, that price came all the way back up here, tap into that order block, and started the sell. This again is another reason why we took a re-entry on the sales. Now as the sales are going on, we already know that this market is for a sale. There are a whole lot of entries we could have spotted, and I'm going to show you one easy way of spotting easy entries on boom and crash. Like here, right here, right here, another reason for my entry would have been the head and shoulder pattern. The head and shoulder pattern right here. Price moved from here, created a shoulder, came back here, created a neckline, created a head, created a neckline again, and created a shoulder, and boom, right here you can see, and then gave a retest to the neckline and all the way to the what? To the previous low that created the high that pushed this head and shoulder. You can see that. That is on its own another entry. Like I told you, boom and crash hugely obey chart patterns and candlestick patterns. They hugely obey chart patterns. As you can see here, after price did that movement, what did I do? I marked here as my major or next area of concentration, because I know this move was the move that stopped this huge bearish momentum falling down here. So I knew that price coming back to that zone is going to react in one way or the other. So I have to take note of it, and then I extended that. Yes, so like I want to show you a secret on how you can easily always find out your next entry. For instance, we all knew this was a down, or this has been a large downtrend on a higher time frame. So we are looking for sales. Now on a mid time frame, we noticed that price was what? Price was ranging. And now as price was ranging, we could see price broke out of the range and created the next high. All right, created the next high. Now I'm the kind of trader that mostly trade against the spike, so you will mostly see all of my trades most likely against the spike a lot of the time. Although I'll be teaching you how to trade to catch the spikes as well. It is the same thing, vice versa. All right, so right now let's start from here. trying to catch. Okay, let's start from here. If we wanted to find another trading um opportunity right here, what would I have done? I would have gone to my line chart to see the technical layers where price has respected. You can see right here for sure this would have been the range low. Okay, and if you come to the lower time frame, you can see this already applying here. All right, you can see this already applying here. So price came and broke out of this very line with a strong body. So what I would have done is I would have taken my Fibonacci right here. Okay, you can see my Fibonacci retracement. I will have taken my Fibonacci retracement. Two things I will be looking for around this Fibonacci retracement area: either a fair value gap or an order block. Okay, those are the two entry reasons I will be looking for. All right, now I haven't gotten that on my 30 minutes. Okay, on my 30 minutes I haven't gotten that. So let's mark this area out. Let's mark this candle out so we can identify the candle on a lower time frame. Okay, so right here would have been my fair value gap on the 30 minutes. Okay, okay, my fair value gap that is within the retracement zone. All right, do I have another fair value gap after here? Yes, this one kind of like closed up. So I would have gone back to my lower time frame, 15 minutes, and I want to see what is happening on the 15 minutes time frame. Do we have any significant ball here? No. All right, we don't have that. Okay, so I'll go to the 5 minutes. If there's nothing for me on the 5 minutes, then I take the zone as it is. You can see, take the zone as it is. So nothing precisely for me on the 5 minutes. I will take that fair value gap as it is. So now that we have taken the fair value gap, what would have been our next target? Our next target would have been to have price coming back into this fair value gap. And what did price do? Immediately right here, price jump into the fair value gap. Where would have been our stop loss? Our stop loss would have been the previous or above the fair value gap a little bit. And where we have been our next target, would have been to the swing low for TP1, which is here, and TP2 would have been here to TP1. That's not a swing low, and right here TP2. Okay, and you can see this is how we must have caught sorry for that. This is how we must have caught about 172 pips on this very market. This is another entry we could have taken. Okay, live, this is another entry we could have taken 172 pips. And what the price do? Price continue dropping down. Okay, price continue dropping down and move all the way up. Now we saw a major pullback right here. We could as well have come to check for another continuation to see where can we enter the market again. Here price never reached back to our retracement zone, so we left the market. Now price came and created a huge buy right here, breaking the current structure and flow of the market, so changing the character of the market. Okay, or we'll call it market structure shift. Okay, so right now what do we want to do? We want to use our Fibonacci, stretch this out, and observe around this zone where can we get either a fair value gap or where can we get order block. Okay, we mark out the zone firstly, and then we'll go to lower time frame to see if we can get fair value gap or order blocks right at that zone. Then we look for our buys. Okay, as you can see, we came down to 5 minutes again, right down here to 5 minutes. As you can see, Okay, so 5 minutes gave it to us more precise. As you can see, we had this very clean, I would call it an order block right here. I call it in my special strategy, I call it the last disturbance to the flow, or the last opposition to the flow. I call it a disturbance on an opposition. All right, and this will have been my entry. So right here, or I could have taken this entire zone where I see this. Okay, all of these candles, I could have taken all of these disturbance candles right here, and that would have been my entry for what? The buys. My entry would have been right here at the beginning, and my stop loss will be under um the zone. Okay, and where will be my take profit? My take profit will be to the previous high. Take profit one will be to this previous high right here. Take profit one will be right here to the previous high. Okay, all right, take profit one will be right here, and take profit two will be to this previous swing high as well. Take profit two would have now been to this swing high right here. So what did we see price do? We saw price move all the way up to this level. Never completed it, but that was enough. 250, that would have been about, let's say, 232 pips. Okay, 232 pips, and price did absolutely well. So this is how we could have found good entries. Likewise, if you wanted to get another entry while going along, go back to your medium time frame. Go back to your medium time frame. Okay, we have, you can use your Fibonacci right here again, from here all the way here, and let's look for what? The retracement zone right here again. You can see the retracement zone. Price will always come back right into that retracement zone. Okay, right into that retracement zone. If you are just joining this video, please kindly share a like, subscribe, share to your friends, and drop a comment for us. Okay, and you can see our stop loss would have been right here, and our take profit to the previous high of the market. Take profit one to this previous high, and take profit two maybe to this swing high right here. That would have been it. So, but you see, price gave us a nice 1 to 6 risk to reward here, and that is how we'll continue going up or down anyway wise. Apply this to your trading. If this video has been helpful enough, please kindly subscribe, drop a comment, let us know you love what we are doing, and we're going to do it better. Please kindly do well to like, subscribe, and share to all of your contacts. Thank you. Stay blessed. Remember to create a Deriv account using the link in the comment section below or the description, and also join our free Telegram channel where I share a lot of first class synthetic trades every day. Stay blessed and congratulations.